Good afternoon and Happy New Year. This is Tom Alexander. This is the video addendum to the report that you can find on my website, alexandertrading.com. Go to weekend updates and you can see the written version of this report. You can download a PDF if you choose, and you can see past reports and you can see how things have played out into the future following what I have been saying each week. Also, if you find value in this video, I'd very much appreciate if you would like and subscribe. It helps with the algorithms and gets the message out. It increases the channel subscribers. Those are all things that are very helpful, and I would very much appreciate it. Okay, let's talk about the new year. We had really somewhat of a historic ramp off the October lows in the U.S. stock indices. Now the magnitude of that move was not as dramatic as many made it seem to be, but that's almost always the case. What was unusual about it was the complete lack of rotation on a day-to-day basis, meaning almost every single day was up, 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 up. We were up 9 consecutive weeks. That was highly unusual. So it was inevitable that we began to see some rotation. Now, I've been talking about that for a few weeks. And again, you can go back and look in the archive of weekend reports, and you can see that I have been anticipating what I think we are in now. So let's take a look at things. I think the market condition has changed. I think that and I like it. I like the volatility. I like the fact that the market is more into the typical way a market develops from an auction market perspective. There's basically a 3-step process. You have a trend, a stopping price, rotation around that trend. And this process of development is in effect in all degrees of time all the time. Now, in the intermediate term basis, it certainly has not been in effect. So you were looking for it to in the intermediate term time frame to truncate into this more rotational market, and I think that's where we are now. I want to let me show you the screen here, and we'll talk about that a little bit more in detail. Now let's see here. Okay, so this was the closing price in December, and you can see how extraordinarily vertical we were. Now what I'm expect to see is something more rotational, something like this, or even like this. Why? Well, it's part of the auction process, and I don't want to get too deep in the weeds here, but the purpose of an auction market, which we're trading, is to facilitate trade. This is trade facilitation, and it occurs in all time frames. And when you don't have it, it is coming right around the corner. We have not had it since the October low. We've been dead vertical. So now what we're going to see is something like this or this. Now this is sort of gross information. I don't know how tradable it is, except on a macro tactical perspective. But what you're not looking for is for the market to go straight up and now to go straight down. So let me clear this, and let's go down in time frame now to daily. Now the auction that I just showed you was a quarterly auction where each letter represented 1 week of trading. Each slot was 1 week. Now this is the daily time frame. Each letter represents 1 day of trade, and each profile unit is a month. And on the other, what I just showed you, each profile unit was a quarter. Okay. So if we split this out, you can see this is December. Now you can see on the more granular level of the daily level, you did have some rotation. Oops, that's not what I wanted. You did have some rotation. It was just extraordinarily shallow in this market. You had tiny pockets of it in here. Now we're getting a little bit more of it. Now this is the December auction that's just begun, and a couple of things I'll point out here. This is an extremely narrow range auction. You're going to get range expansion big time from here. Now, Could we go straight down from here and expand the range to the downside? Yes. Could we go straight back up and probe into this area before going down? Yes, we could. But what I do think you're going to see now going forward is, the dominant trend off the October low was vertical. Now I think the dominant trend for the next few weeks, maybe even months, is going to be more horizontal, where trade is bound by some sort of upper extreme and a lower extreme, and you chop around and churn in that area. Now, that again, that's not really tradable information. It's more of a strategic orientation to trade strategy, and I don't get much into trade strategy here. You can trade this methodology many different ways, and you have time frames that overlap. So I'm doing something differently when I'm day trading versus when I'm swing trading. And long term to me is 2 or 3 weeks. Okay, I'm not here predicting the great Armageddon crash or the great ramp to 6,000. That's a fool's game, in my opinion. Okay, so let's take a look at the bar charts. Now, this shows, this is a beautiful view of the verticality of this market. This is the SPX, by the way, obviously, off this October low. It's just as vertical as it gets, and you did have your minor pockets of balance in here. That, and the hallmark, the unusual thing about this balance was you had just extraordinarily shallow retracements against the high. Now we have the biggest retracement in terms of magnitude, which is only about 2.3% from print high to print low. And again, that's nothing. I mean, we can go all the way down into really this area around 4,600, which would not surprise me, and that's only 4%. So it's, everybody thinks that we had this dramatic drop last week. Everything is drama in financial media, Twitter, etc. This was last week was nothing. Okay, let's take a look at now the NDX has had a little bit more drop in terms of magnitude and is sitting just above an important key reference area. The Russell has had a pretty healthy retracement. Now, this 1995 level was really important, and it was bullish that the Russell traded above it. You want to see, in my opinion, you really want to see the Russell on further decline hold this area down here. This is just above a 50% retracement of this ramp off the October low. If we're going to have this bull run in the next year, the Russell has to participate. And it's a real heads up if it begins to show relative weakness versus the other indices, which it's not doing at the moment. You came down and you closed this gap. That's not a big surprise. But again, the next level to the downside is here around 1895 to 1865. And then we look at the Dow. The Dow it's done practically nothing. I would not be surprised, and I put this in the written report, that you can go to the alexandertrading.com weekend update, click on the date for today, and you can see these charts. But I would not be surprised to see the Dow trade to another high in this next rally, and then nothing else follows through, and then you have another decline, etc. But the Dow is, this is practically nothing off of the print high. Okay, let's take a look at the internals briefly here. Let me find that. Here we go. Now, there, I use, for those of you that may be finding me for the first time, I use very simple things. What you see here, the red oscillator line, is basically nothing more than a 10-day moving average of NYSE advancing issues. The green is the 5-day moving average of NYSE advancing issues, and this is closing breath. There is nothing on this chart that is bell ringing. We've been drifting lower in the 10-day moving average of and the 5-day moving average of NYSE advancing issues, but we're nowhere close to a downside extreme yet. Breadth has not, and this is what concerns me about this being an important low. I think this could be a short-term low, but we haven't had anything resembling capitulation in this market, either in terms of internals or VIX, which has remained stubbornly low. It's up a little bit, but not a whole lot. So what you're really looking for, what I would like to see eventually a negative 2,000 breadth reading. That would put us in an interesting situation. And if that happens, of course, you will hear me talk about it. One other thing to note, this is a chart that I lean on very heavily especially for day trades, for intraday decisions, but as well as for swing trade decisions. Now, I've said many times, the price-breadth relationship works best in bear trends, not as much so in bull trends. And it works best in two-sided markets. In markets like we had from the October low into the December high, it's not nearly as effective or helpful, and you get a skillion false signals, and you'll get run over by it. But if we are now in a more two-sided market to a bear trend, this perspective will be increasingly helpful in making trade decisions. Okay, guys, I hope you found value in this. Again, if so, I would very much appreciate it if you would subscribe, if you would make comments, if you ask me questions, I will answer all your questions. You guys have a wonderful weekend, and I will speak with you again soon.